Hi everyone, welcome to today's video. So on today's video, I'm going to reveal the answer as to how many stocks do I own. So I was just checking my portfolio and I own 64 different stocks. 64. Now many of you would jump to the conclusion and would say that, hey Akshat, you own like too many stocks. 64 is just a big number. Please watch the video till the very end. I will help you understand all the various points with example. I will share the names of a few stocks along the way. How am I trading and investing in those stocks? Listen to this video, super important, super critical. I will also help you understand the investing strategy of Mr. Warren Buffett, how he has gone about building his portfolio and why he has something called as a concentrated portfolio. So we will talk about that. We will also talk about Mr. Ray Dalio's portfolio. His portfolio is diversified portfolio. So we will try to understand this different macro perspective of how investors go about developing and designing their own portfolios. Using these principles, you can develop your own portfolio too. Super important video. Please watch it till the very end. This is a very important video. It will teach you a lot about stock market investing. Before we jump in, very quick few disclaimers. Number one, there are a lot of scammers and spammers on the comment section. I have tried blocking them. They use bots. Impossible for me to do it. So please be aware. Unless I'm speaking something on the video or in my description box, please don't go and believe all those things. That's one. Second, many of you asked me that, hey Akshat, your insurance video was really good. Can you please tell us where we can get more information about insurance, how to buy health insurance, life insurance? There is a company called as Ditto. I have put the link in the description box. It is run by my friend Pawan. They give information for free. So please go speak with them. The link is in the description box. You can easily schedule a call and it's completely free. Super easy for you to understand that. I myself buy insurance from them. Third, many of you have asked me that, hey Akshat, you created your small case. The consumer durable small case has been doing fabulous. We want to invest in it. How to do it? Link is in the description box. Please take a look. You can see the returns that these different small cases have been generating. So with that said, let's get started with the video. So first key point that you must understand from this video is the difference between a concentrated portfolio and a diversified portfolio or an over-diversified portfolio, so to say. Now let us understand this point by delving into the portfolio of two major investors or two really big investors. Both are billionaires. So let us first look at Mr. Warren Buffett's portfolio, right? So here is the Warren Buffett's portfolio. He runs a company or a hedge fund called as Berkshire Hathaway. And if you take a look at Mr. Warren Buffett's portfolio, you will see that he owns Apple, which is 41%, right? 41% of his entire multi-billion dollars portfolio, 41% of it is made up of Apple, right? Then you have Bank of America for 14%, you have American Express 8.5%, Coca-Cola is approximately 7.5%. So he holds really big position, right? If you combine these top 5 stocks, it will make up like what? It will make up almost a 65% portfolio, which is huge, right? So this is a highly concentrated portfolio. Okay, this is a super concentrated portfolio. Why? Because he's not owning too many stocks, but he's owning few stocks, but the proportion of those stocks is very high, right? So this is called as concentrated style of investing, and it has both its risk and rewards, which is fairly obvious, right? For example, in Mr. Warren Buffett's case, if the Apple stock goes up, his entire portfolio will go up massively, right? If the Apple stock goes down, his stock portfolio will come down again massively. Now, this is a high risk, high reward type of a game. What does that mean for you as a retail investor? Should you go like super specific? Should you also go and invest like 41% of your entire money in Apple? The short answer is no, right? Now, why is that? Why am I saying that you should not be so deeply concentrated, right? No matter what type of a retail investor you are, you should never invest 41% of your entire money in one single stock. Please do not do that. Why? Why am I saying it? It's not as if that Mr. Warren Buffett is incorrect here, but you need to understand one very important key point here, that Mr. Warren Buffett has access to a lot of privileged information. If he wants to know more about Apple, he can call up Tim Cook. He can understand things from him directly. You and I, even if we own Apple products and if we go to the service station for Apple to get our laptops repaired, it will take us a lot of time to even get that stuff done. Now, many of you will jump, you will say that, hey, you know what, insider trading. No, this is not called as insiders trading. This is just access to information. Who is stopping Mr. Warren Buffett from calling up Tim Cook, asking him some probing questions and getting more information out of him? He can do that. We can't do that, right? So when these big investors take these type of positions, 41%, 14%, 10% is fine. But when you see like 41%, 14, 15, 20%, these numbers are just too high, and you should be very, very sure that whichever company you have have invested in, they will give you relevant information and they will give you timely information. Okay, this is a very important point. I'm not trying to criticize the investing style of Mr. Warren Buffett. Who am I to do it? He's a genius, right? But all I'm simply trying to tell you is very basic common sense that as retail investors, I'm talking about retail investors here. As retail investors, we do not have this type of luxury. So please don't blindly emulate Mr. Warren Buffett's strategy. It can be disastrous for you. So this style of portfolio design is called as concentrated portfolio design. Now, many investors will tell you that, hey, you should have concentrated portfolio. Many will say diversified portfolio. So let us understand what diversified portfolio are by looking at whose portfolio? Mr. Ray Dalio's portfolio. So let us go there and let us see what type of positions he has taken. Now here is Ray Dalio's portfolio and you will see. So he has 5.42% holding in what? In S&P 500, which is what? Which is an index. It is a type of a mutual fund, so to say. This is not a single stock. There also he has only 5.42% of his holding. Now, if you take a look at individual stocks, then Walmart less than 5%, Procter & Gamble 4% almost. Johnson & Johnson 2.9%, Coca-Cola 2.86%. So if you go down, you will see that, hey, this person takes like very small bets in multiple stocks. So this type of portfolio design is called as what? It is called as diversified portfolio style of investing. Now, very important again that it is not as if that Mr. Ray Dalio is incorrect and it is also not that Mr. Warren Buffett is incorrect. Both have their own styles, both have been making insane amount of money in the stock market and they would continue to make insane amount of money in the stock market despite following two very different styles of portfolio design. Now you would say, Akshat, that hey, great discussion, but how is it relevant for us? We are not billionaires like Mr. Warren Buffett and we are not billionaires like Mr. Ray Dalio. We don't care, right? So tell us a strategy that applies to us. So let me share my strategy. But before I do that, would request you to hit the like button. It helps with the YouTube algorithm, helps my video get to more people and make them financially educated. So please hit the like button. Do it now. Okay. So now let me get into my portfolio. So let me note down some important points. My portfolio. Okay. Now how many stocks do I own? So I own 64 stocks, right? So I am a concentrated or a diversified type of an investor. I am a more diversified type of an investor. And I'm also like a macro investor, right? So I study the macroeconomics and I make investments from that angle. That is the most important angle for me. That's one. Second point, I invest for growth, right? These are some key terms that you need to understand. I'll explain it more. I do both trading and long-term investing, right? These are some key points that I was noting down so that I can explain you the rationale and logic and definitions of all these things. Okay. So here are important words. Diversified. I want to build a portfolio which is well diversified. I understand that I do not have the type of privileged information that Mr. Warren Buffett has, right? So it is just madness for me to invest 40%, 30% capital in one single stock. I've said it again that I never invest more than 5%. Usually more than 5% and very rarely I'll go up to like 10%. That is the max that I would ever do, no matter how strongly do I believe in one single stock. So this is the number one rule that I follow. Number two rule, I invest in all types of companies. For example, I will invest in small cap companies also. I'll invest in mid cap companies also. I will invest in large cap companies also, right? This is the number two thing. Number three thing that you need to understand about me is that I'm a slightly risky investor, right? It means that my portfolio allocation will be there in small case and mid cap more compared to large cap stock. Now, this is something that I would not advise to you, especially when you are starting out in the stock market. When I started out in the stock market, I used to have more positions in the large cap. Over time, especially given the economic scenario now, I have moved more towards small cap and mid cap stocks because that is where major growth would happen. Why am I doing it? Because I'm a slightly risky investor, right? You don't need to do this. You have to design and figure out your own portfolio style and strategy. Please take this discussion from an education point of view, not from an investment advice point of view. Now, the final point is that I do both long-term investing. So long-term investing means that my time horizon will be like 10 years on that stock. I'm okay, not selling it off. Whatever happens with that stock. And then I do swing trading also. So let me explain these points by giving you relevant example, very recent examples. I have made separate videos on all these topics, and if you're a regular viewer, you would agree with that. Okay, so let me explain that I hold certain stocks from a long-term perspective. So what are these stocks that I'm holding from a long-term perspective? So these will be really fundamentally strong stocks. For example, this would be something like HDFC Bank. Now, whenever I see HDFC Bank trading around its 200-day moving average line, I will go and buy it. Even if it is slightly up than that, I will buy it. I recently took huge positions in HDFC Bank. Here is an entire video explained on that. So when am I looking to sell this off? I don't think I'll sell it, right? So I honestly do not want to sell it. I'm trying to aggregate more of HDFC Bank at every dip, right? So when they say that, hey, buy the dip, it means that buy fundamentally strong shares which you are trying to hold from a long-term perspective on dips. This is my strategy. So whenever HDFC Bank falls, I will buy a little bit more of it. Then whenever it falls, if I have more money, I'll buy more of it. Up to what point? It will never go more than 10% of my portfolio ever. It will usually stay at around 5%. Now the same goes for HDFC Group, right? Why? I have again made a separate video on HDFC Group. Please go and watch it. I consider it to becoming one of India's major monopolies, so to say, especially in finance and fintech space. So I'm taking a good 10-year period horizon on HDFC Group from that perspective. Now, unless something major happens, I'm not going to sell these stocks, right? So this, according to me, is long-term investing, that keep buying fundamentally sound stocks on dips. Now, what happens with this long-term strategy is that sometimes you have to be patient, right? For example, I'll give you the example of ITC, right? ITC. Now, I am a holder in that stock. I bought that stock from a long-term perspective. Again, I'm still sitting on profit on ITC. It is not a type of a stock that is giving massive returns. It is hardly giving any major returns as of now, but I'm hopeful that it will give more returns as we go along. Meanwhile, I'll enjoy what? I will enjoy dividends, right? So ITC gives out a lot of dividends. I'm enjoying it. They give like 6 to 7% dividends anyways. So I'm okay parking my money in ITC. So this is another stable stock that I will buy, right? So the bottom line is that when I'm doing long-term investing, I'm investing in stable, good growth companies that can become monopolies or are monopolies in a certain space. Now, some long-term investments I make from an opportunistic perspective, right? Opportunistic perspective. Now, this is somewhere between like my swing trade and a long-term trade, right? So I'm not categorizing it. I'll give you an example. So back in August, if you check my videos, you will see that I made a video on Bharti Airtel, right? I said I analyzed all the fundamentals. I told you that, hey, this is a good stock. I'm betting on it. I have invested money on it. And this was back in August when it was trading somewhere around here, like 615, 620 levels. Now it has reached almost 690 levels. So I'm already sitting on this profit and it has recently started giving breakout, right? So is Bharti Airtel a long-term stock for me? I don't know, because I don't trust Bharti Airtel to the extent I trust HDFC Bank or HDFC Group. So that is something that I'm completely bullish on. I'm completely comfortable holding that. But Bharti Airtel, I have to wait and monitor. Now, why did I buy it, right? Because when I bought it back in August, it was trading at good price. All the indicators were pointing out. Again, you can watch the video here. All the financials, all the business sense was telling us that, hey, this is likely to give a breakout. So I held it. Had it gone down, I would have been okay with it because I was sure that, hey, Bharti Airtel will be one of the top 2 telecom companies and it will definitely go up in price from its 620, 630 levels. So that is the reason why I was a long-term investor from Bharti Airtel. But is it like buy and forget? No, right? With HDFC Bank, I can do buy and forget. But with Bharti Airtel, I can't do it. I have to monitor its debt. I have to see how the telecom market is shaping up. So this level of analysis has to be done. So I hope you got my perspective on long-term investing. Now let me talk about slightly more exciting stuff, which is swing trading. Now swing trading basically means that I'm buying a stock with a very clear target price in mind, right? For example, let me again explain you an example that I gave a call on Hindustan Unilever somewhere around like 2400 levels, right? 2350, 2400 levels a couple of weeks back. Now it was trading at 2400 levels. And why did I give that call? Because all the large cap stocks were moving a few weeks back and the FMCG industry was not moving. So I thought that, you know what, okay, let me buy HUL stock in bulk. I will buy it. And then when the prices go up to around 2600, I will sell it off. So then exactly that happened, that prices went up to 2600. I sold my position on HUL and made like 8-9% return. I'm sure that all of you would agree with that because I gave that call on the channel also. After that, what happened? It had continued to go up and it is at 2800 level. Now you'll say that, hey, Akshat, you know what? You sold it at like 2600. You did not make the maximum amount of money. So see guys, no one can predict till what point the stock price will go up or down. No one can predict that, hey, buy it here and sell it here, right? That is the highest point. No one can do it. No one, absolutely no one can do it. But what we can do as retail investor is that we can look at the momentum in the stock, take a swing trade on it, have very clear target in mind, do the rational analysis and make like good money in a very short span of time. For example, if in 2 weeks, if I made 8-10% return on a stock like HUL, which is a fundamentally strong stock, What is wrong with that? There is absolutely nothing, right? There is no end to greed. This could have been like 20%. I don't care. But I made good returns. I put this money elsewhere and that was it. So I'm very happy taking these type of swing trades. So I hope you understood the fundamental of swing trade, that I had a very clear target in mind. I picked up HUL and sold it off. Now you would say, Akshat, that okay, hey, you know what? Okay, this sounds really amazing. But you already made like a swing trade on HUL. So what other swing trade you can identify in the market right now? Okay. Glad you asked, and this is where we can have a discussion. So another swing trade that I can identify is the Kotak Mahindra Bank. Now this is a very big bank. It has a very big weight in the Nifty Bank Index. Now, if you actually take a look at the Kotak Bank, you will see a few key trends. So let me do a very quick stock analysis. The stock is trading at 1800. The highest level it has reached is approximately 2000 levels. So there is good 10% gain to be made here, right? Now let us look at financials. Can it actually pan out, right? If you actually take a look at the revenues have been going up. The net income has increased. All good things are happening in this stock. Now, it is just that the banking stocks are underperforming at the moment. So if I want, I will take a swing trade on it. And guess what? I've taken a swing trade on it. I have bought Kotak Mahindra Bank and it is likely to go up. Again, please do it with your own analysis. Please do not take it as an investment advice. This is the swing trade that I'm taking now. So we are sitting on 12th September and that is when I'm making this video. So the point is that I feel that there are always these great swing trade opportunities in blue chip stocks. Right? HUL was a blue chip stock. Kotak Mahindra Bank is a blue chip stock. So even if it happens that I am wrong, right? For some reason I am wrong and next 6, 8, 10 months, the Kotak Mahindra banks come down to 1600, 1500 levels. Can you not hold it? You can hold it, right? There is absolutely no problem because you know that a Kotak Mahindra Bank is really good. Again, assuming that there is not something fundamentally berserk that goes into Kotak Mahindra Bank. So the bottom line I'm trying to tell you is that whenever I take these swing trades, I do it with safe companies. I do not do these swing trading with weird companies. I do not do that at all. So even you should not do that. Now I also take swing trades depending on the nature of the stock itself. For example, let us talk about our favorite bank. Type out the name. So it is SBI. Now take a look at the history of SBI, right? You will see that it trades literally in a range, right? So if I paint this range, it goes something like this, that hey, if the stock price hits here, buy it. If it hits here or here, just literally sell it. That is what you need to keep on doing. There is so much consistent variation in a stock like SBI. Therefore, it is a trading stock for me. It is not an investing stock. So I hope you understood the fundamental difference between how I invest in stocks, right? Long-term investing, and how I trade or swing trade in stocks, right? Swing trade, I have very specific targets. There are only certain number of companies in which I do it. Bajaj Finance was one for which I was doing it last year. This year I did it with HUL and a few other stocks, and I'm now doing it with Kotak Bank. So this is what swing trading is, right? So whenever I'm saying that, hey, I own like 64 stocks, some stocks are for swing trade, some stocks are for long-term trade. So I hope this fundamental difference is clear. Now let me talk about the third and final part of my portfolio, which is investing in growth stocks. Right? And how do I choose how to invest in growth stocks? So if I'm investing in growth stocks, then what I do is that I pick like small cap or mid cap companies, right? Not large cap companies. These are growth stocks. These are very opportunistic buy and sell, right? So these are stocks, for example, I gave you the example that I hold a big position in Equitas Holding, right? I had been aggregating this stock for a while, right? I have bought and sold this stock multiple times, right? Now, how do I do it? So essentially what I would do is, now if I have identified that, hey, you know what, this stock is really good, it has decent fundamentals, right? This is the first step that I would take, that hey, Equitas Holding, decent fundamentals, I will study this stock further, right? How do I study this? There is an entire video that I have made on Equitas Holding. You can check it here. You can understand how I have done the analysis for Equitas Holding. So without wasting time there, what I would say is that first step is that I'll research the stock. Second step is that I will start taking small positions, right? For example, if I have to go and invest in like, let's say 10 lakh, right? What I would do is that I will divide this money into 4 parts, right? Now, I would sort of do an averaging on it, upward or downward, right? It doesn't matter if I'm going to invest 10 lakhs, stock price can go up or down. If nothing fundamental changes in that time period, I'm going to invest this, but in 4 parts. Now, you would say, Akshat, why don't you go and invest all the money in one go? Because of the fact that I'm trading with small and mid cap companies. It is very important for me to spread out that investment. If I'm investing 10 lakhs, I'll spread it over a window of 3 to 6 months. I will do it in that way, reach a big position. For example, if I've reached a position of 10 lakhs in Equitas Holding, then what I would do is that I will keep monitoring, right? I will monitor it for, let's say, another 3-4 months. I will look at the performance. I might sell some of the stock if it has spiked. Now, why do I do this? This is an important step for me, especially in mid cap and small cap, because it gives me courage to hold the stock, right? If I have made enough money from Equitas holding, guess what? I will always feel that, hey, I have not lost money on this. So let me hold it for a little while. What I'm trying to do in small cap and mid cap stock is, and this is an investment style, you might agree, disagree, that's your own prerogative. I'm not saying follow this only. But my style is very simple, that what I try to do is that I try to build a cushion, right, with small cap and mid cap stocks, because small cap and mid cap stocks have massive volatility. They can fall and rise like crazy, right? Someday they are up by 10%, someday they are down by like 6, 7, 8%. So it is very important for me to make a little bit of money, swing trading it for a little while, so that if I made that money, it gives me the strength to hold fundamentally good stocks. For example, I feel that Equitas holding is a good fundamental stock. I will pick it up. I will take a few swing trades, make a little bit of money that acts as a cushion, that in case something goes wrong with Equitas Bank, I have at least secured my position. This is how I trade in small cap and mid cap stocks. This is the way I design my portfolio. Just to recap, number one, I have some stocks for long term. Example, HDFC Bank. I would not sell it. Very rarely I would sell it. This is long term, like at least 10, 15, 20 years down the line, I will see what to do with it. Then swing trade, very clear target in mind that, hey, HUL will move from 2400 to 26, sell it off at 26, make money, move on to the next swing trade. Finally, I'm investing for growth, where small cap, large cap. Here, initially, I swing trade and then I hold, right? So this is the strategy that I'm following, and therefore I have 64 stocks in my portfolio. Now you might say, Akshat, that you know what, I have like 1 lakh rupee to invest or 10 lakh rupee to invest. So what advice would you have for me as an investor? Now this is a very complicated question for anyone to answer, but I will try to give you some general rules that have helped me. Now please build your own strategy towards it. Number one, please understand your portfolio size, how much money you want to invest over the next 5-6 years. Please keep a track of that. Very important. You need to have an understanding of the capital that you want to invest. If you only have 50,000 of capital, there is honestly no point in investing more than 5-6 stocks, right? So at least keep like 10,000 per stock as your budget. This is the first general rule that I can give you. Number two, please understand what type of an investor you are. If you are a risk-averse investor, if you want to invest in safe stocks, then please go and play only in fixed deposits, gold. If you say that, okay, you know what, no, not that safe, just a little bit more risky, suggest something. So I'll say that, okay, invest in large cap stocks, very important. Bottom line is that you need to understand and define your risk, right? I am an investor who is investing for 15-20% return a year. This is what I'm trying to do. Now, please don't say that, hey, you know what, Mr. Warren Buffett does not make like 15-20% return every year. How can you make it? Please don't get into all those type of arguments. I'll explain it on another video how retail investors can do it and have been doing. Not only me, a bunch of other retail investors have been doing that for the last several years. If you don't trust me, go and check my consumer durables. No one was mentioning that, and it is up by like 17-18% already. Link is in the description box. Please go and check it out. Number three, please do not invest more than 10% of your capital ever on one single stock unless you have some really prominent information from somewhere, right? So please don't do it. As retail investors, we work with very limited information. We do not have access to very quality information, so to say. We do reasonable assumption based on the information we have. So we are not Mr. Warren Buffett. We can't invest like him. If you are a goldfish, don't try to invest like a shark. Please do not do it. Be well diversified. This is the third point that I would say. Fourth and finally, what I would say is that please stay invested across different industries also. If, for example, if you say that, hey, I'm buying AMC stocks, then identify 2-3 top players in it and invest in the top 2-3 stocks there. If you are investing for growth, then invest in growth industries plus growth stocks. So what are growth industries? So you have identified that, okay, EV sector might be a growth industry. AMC sector might be a growth industry. Banking sector might be a growth industry. So if you are putting money in these industries, what are you doing? You are investing for growth. If you are investing for growth in stocks, what are you doing? You have to go mid cap and small cap. That is where major growth will happen. So I hope you are able to parse together or piece together all these different points. I hope you found this discussion to be insightful and clear. Let me know if you have any questions in the comment box. I would love to reply to those. Again, please do not fall for scams. There are a lot of spammers. Please do not believe it. Unless you see it on my pinned comment, which is right at the top, do not believe that information, or you see it in the description. And if it is very important, I will mention it in the video itself. So I hope you enjoyed the video, and I will see you the next time.